Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And excuse me just a moment, I need to update my stream settings on YouTube. Just a reminder, I am streaming at 1080p on YouTube. If you have any issues with screen resolution, check your settings, go to the gear on your stream, and you should be able to set that to 1080p. That's what I just did. I was having a little bit of a resolution issue on the computer that I'm looking at to see my stream and the chat. All right, so here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel, which I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @DougPless. The focus of my presentation today and the focus of the Options-Doug chat channel is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be talking about an underlying asset, and setups in that asset can be taken any number of ways. For example, S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. All right, here's my agenda for today, Monday, December 4th. First of all, I want to go over news items, economic data, and events for the upcoming week. Then I'll go through my position analysis for today. Then I'll review some setups from earlier today. And then I'll talk about the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with news items, economic data, and events. For this week, it's pretty light. There is some PMI data coming out tomorrow at 9:45 and 10 a.m. Then on Wednesday, the ADP employment report comes out at 8:15 a.m. Eastern Time. And then the jobs report is on Friday, 8:30 a.m. Eastern Time. Could be a potential market mover. Note that I guess due to the Thanksgiving holiday, that report was supposed to be last Friday, pushed to this Friday. So that's the jobs report, Friday, 8:30 a.m. Eastern Time. And then on Friday, also the Michigan Consumer Sentiment is out at 10 a.m. Eastern Time. So again, a pretty light week except for the jobs report on Friday. Next week, there's a significant shift higher in economic data and events, CPI, FOMC meeting, the last one of the year, and then of course the big December options expiration. I'll talk more about that on Monday. All right, so a pretty light week as far as economic data and events go this week. All right, let me start with positional analysis now, and I'm going to go to the S&P 500. This is the ES Futures and Bookmap. And before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to the SPX. This is a 30-day, 1-hour chart. First, I want to point out the key events on this chart. This is October 30th. That's when this current rally began. And on the Friday before, traders were loading up on puts, concerned about weekend risk. And then on Friday, price started to move higher, implied volatility dropped. And this led to a huge IV collapse, put van rally. As traders were buying puts, market makers were selling the puts and then selling futures to hedge their delta exposure. And then as price increased, implied volatility dropped, market makers' delta exposure decreased, and they can buy back their short futures. That was the put van rally. And during this time, market makers' position on the gamma curve shifted from negative to positive. There were several periods of consolidation as gamma notional approached or became more positive. The next event is the CPI report, November 14th. Better than expected, and that boosted the rally. And then price has really been grinding higher in a positive gamma environment where market makers have to trade against price to hedge their delta exposure. All right, let me point out the levels on this chart. First of all, the dashed purple lines. Let me zoom in on this a little bit so we can see these levels a little bit more clearly in current price action. So first of all, the dashed purple lines are showing the lower and upper weekly expected move. You really can't see the dashed purple line, but it's right there. That's the upper weekly expected move. This is based on the options market. It changes once a week. I update it over the weekend. Excuse me. So that's the upper and lower weekly expected move. And the dashed blue line showing the lower and upper daily expected move. That's updated once a day. And note that SPX did gap down below that level and is now trying to recover the lower daily expected move. Again, this is also based on the options market. The solid red lines are showing Spotgamma proprietary levels. I'm going to point out the key daily levels. Again, these are proprietary Spotgamma levels available to Spotgamma subscribers, showing a variety of trading platforms. Here I'm looking at Thinkorswim. I'm going to point out the key daily levels. First of all, there's the put wall at 4,400. That's a strike with the largest net negative gamma that can be expected to act as support. The next level up is 4,500. That's the volatility trigger. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, they have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility, leading to more mean reverting price action. And above that is 4,600. That's this level right here. And that is the call wall and the absolute gamma strike. The absolute gamma strike is the strike with the largest absolute negative and positive gamma. That's where most of the gamma weighted open interest is concentrated, and that's all excuse me. That's also the call wall, the strike with the largest net positive gamma, and that can be expected to act as resistance. So the potential range, 4,400 potential ceiling and 4,600 potential or put wall, potential floor at 4,400, potential ceiling 4,600 at the call wall, and then the volatility trigger level at 4,500. All right, let's take a look at a one-day chart to see the levels that are in play for today. Excuse me. All right, this is about 2 days worth of data, 1 minute chart, again at Thinkorswim, and I wanted to show this. This is on Friday, and this is the reversal at the 4,600 call wall. So at the time, 4,600 was the call wall. It was not the absolute gamma strike, which did shift higher today. So for the SPX, volatility trigger shifted lower to 4,500, and the absolute gamma strike shifted higher to 4,600. So that call wall acted as resistance on Friday, and today the levels in play, the lower daily expected move acting as resistance, and then this 45.50 level more or less acting as support. And the 45.50 level was noted as support in the Spotgamma AM Founders Note. So let's go take a look at Bookmap now. And there's that 4,500 level, more or less acting as support. So I have my own cloud notes in Bookmap, so I can show SPY levels. There's the 458 volatility trigger, and there's that 45.50 level, large gamma 2 support level that I mentioned. So I have SPY levels, SPX levels, and then also key levels for ES. There's the lower daily expected move, and ES was also trading below its lower weekly expected move earlier today. Hey Stephen, hello. Welcome, glad you're here. And hello Floyd's Garage, welcome, glad you're here as well. All right, now there is a difference in price between ES and SPX, and today it is around 7 points. That's what I'm using. So the 45.50 level for SPX, I'm showing at ES 45.57. So ES minus SPX equals about 7 points today. All right, so those are the levels in play for today. We'll take a look at setups in a few minutes. So really the key level is the 45.50 level. Potentially lower the day, we'll see. All right, let's take a look at NASDAQ. Oh, for SPY, there were a couple shifts higher in levels. The volatility trigger shifted higher for SPY. That's shown up at the top here. So the S&P 500 is trading below the SPY 458 volatility trigger. And also the absolute gamma strike shifted higher to 460. So somewhat matching the SPX volatility trigger also shifting higher. So the both the call walls and the absolute gamma strikes for SPX and SPY are at 4,600 and 460. So that is bullish. All right, let's take a look at NASDAQ now. This is in Q futures in Bookmap. And before I take a closer look at this chart, I want to isolate, first of all, the QQQ levels in play for today. Let me zoom back out a little bit. This is a 1-day, 1-minute chart in QQQ. A lot of Spotgamma levels above. Note here, this is the 386 0 gamma level acting as resistance. Volatility trigger above at 389. So QQQ is trading below its volatility trigger. All right, that level did shift higher for QQQ up to 389. So again, QQQ trading below its volatility trigger. All right, let's take a look at NDX. Zoom in on this just a little bit. So this is a combo L4 level, and just above that the 16,000 level acting as resistance on Friday. NDX gap lower and is trading well below that. Now the call wall is in play. That's at 15,825. That's also the absolute gamma strike. And note the volatility trigger just below. All right, so again for QQQ, the volatility trigger shifted higher, and for NDX, the volatility trigger also shifted higher. All right, let's go take a look at NQ now. So just like the S&P 500, I have my own cloud notes. So I can show QQQ levels. There, for example, is the 386 level, large cluster of levels there. That's the 386 level for QQQ. That is a Spotgamma level. Just below that is the NDX 15,825 absolute gamma strike call wall. Some consolidation at that level, and then maybe acting as resistance in the afternoon. Note that NQ is trading below its lower daily expected move, and earlier today did trade below its lower weekly expected move. So it looks like the 383 level for QQQ acted as support around 11 a.m. And again, we'll take a look at setups in a few minutes. I'm just looking at the levels in play for today. All right, let's take a look at gamma notional now to see how market makers were positioned on the gamma curve at the beginning of the day. So what I'm going to take a look at is this right here. Market makers position on the gamma curve at the beginning of the day. This is provided every day, every trading day in the Spotgamma AM Founders Note to Spotgamma subscribers. I'm going to look at gamma notional for the S&P 500, NASDAQ, and Russell 2000. Note all these numbers are positive. For an index, that indicates that traders are short calls. This is what Spotgamma assumes. Traders are short calls. Market makers are long calls, so their position on the gamma curve is positive. In a positive gamma environment, if price increases, they have to sell futures, and then as price drops, they can buy back their short futures. They always want to remain delta neutral, so they're hedging their delta exposure with price movement and changes in implied volatility that we'll see in just a minute. All right, so again, all these numbers are positive, and they did all increase from Friday. They were all positive on Friday and became more positive today. So this tends to lead to mean reverting price action, range days, more range days instead of trend days. So even though price action in the morning was pretty bearish, in a positive gamma environment, that price action is more likely to reverse. All right, so let's take a look at the Vanna model to get an illustration of what this means. I'm going to start with SPX. This is the Vanna model for SPX. What this chart is showing, on the vertical axis, this is market maker's delta exposure, delta notional, and spot price for SPX on the horizontal axis. There are two curves on this chart. The light gray curve is showing how market maker's delta notional may change with changes in price only. And the purple curve adds implied volatility to the equation. That shows how market maker's delta notional may change with changes in price and implied volatility. That's the curve that we want to take a look at. And that is the Vanna effect, is the change in delta with a change in implied volatility. That's a second order Greek. All right, let's take a look at current prices now. First of all, SPX is trading right around 45.63. So slightly on this left portion of the Vanna model here. And what this is showing is if price continues to increase, market makers, there's a slight Vanna tailwind here. Market makers can buy back short futures. On the other hand, if price started to decrease and SPX started to approach 4,500, market makers would need to sell futures to hedge their delta exposure. This V-shaped curve is very typical of a positive gamma environment. And if price continues to increase up toward 4,600 and beyond, market makers will need to sell futures to hedge their delta exposure. Remember, they always want to remain delta neutral. So that's SPX, Vanna model. Let's take a look at SPY. SPY currently trading right around 456. So really in a pretty similar position, maybe slightly further up this position on the Vanna model, the sloping up to the left, indicating again if price continues to increase, implied volatility drops, market makers can buy back short futures. And finally QQQ. Currently trading right around 385. So slipping further along this portion of the Vanna model, the sloping up to the left. And remember, QQQ is trading below its volatility trigger, and SPY is also trading below its volatility trigger. So potentially shifting more negative today. Gamma notional. All right, let's take a look at some setups now. So I'm going to start with this hero signal to see what options traders have been doing today. So this is the hero signal, hedging impact real-time options. So everything that we've looked at so far, other than Bookmap, is based on static data. Gamma-weighted open interest. Spotgamma applies their own proprietary algorithms to come up with the levels and the Vanna model, everything that we've looked at so far. So that's static data, updated once a day. Now this hero signal, hedging impact real-time options, is based on real-time data. So this is showing options trades and market maker hedging activity for a combined signal for the S&P 500. SPX, SPY, XSP, and ES futures, all into one combined signal. And when I'm trading the S&P 500, this is typically the signal that I look at. There are two lines on this chart. The white line is showing price for SPX, and the purple signal is showing, that's the hero signal. Again, hedging impact, real-time options, showing options trades, market maker hedging activity for that combined signal. And a rising purple line indicates traders are taking positive delta positions. Net buying calls and or selling puts. And a falling purple line indicates traders are taking negative delta positions. All right, let's zoom in on this curve, this signal. So this is the cash open right here at 9:30 a.m. Eastern Time. So there was, first of all, a short signal. Right around 9:55, something like that. Setting up a short. And then the hero signal leveled off and price started to increase around 11 a.m. All right, so let's separate out puts and calls so we can get a little bit more detail about what traders are doing. So this separating out puts and calls, first of all, really clarifies this morning setup. So initially traders were buying calls, that's shown by the rising orange line. They take their foot off the gas, and then traders start buying puts, that's shown by the falling blue line, and that set up that short. Could have taken it either here or here, setting up a short in the morning. So that's the first setup. Then traders stopped buying puts. The blue line levels off. They stop. They really haven't done much with calls, so they stop buying calls. Then right around 11:10, they start buying calls. So they were buying calls in the morning. That activity levels off. Then initially they started selling puts. So to kickstart off this long setup, the blue line and the orange line were moving in the same direction. Now the blue line has pretty much leveled off, and traders have continued to buy calls. So note as the call buyers again took their foot off the gas, orange line levels off, they start buying puts again, now price moving a little bit lower. So separating out the puts and calls here gives you much more insight into price action. Let's go take a look at Bookmap now. Go back to ES futures. I'm going to zoom. All right, this is good enough. So this is the initial short. right here just below VWAP. That's this, whoops, VWAP right here, just below VWAP. Reading the order flow, the volume dots are showing market buy minus sell. Green dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. Note the shift in order flow. Aggressive buyers on the way up, and then aggressive sellers start to come in. Price moves lower, pull back. Some aggressive buyers come in, then aggressive sellers start again, and price moves down to the 45.50 level noted as support in the Spotgamma AM Founders Note, and just a little bit below that. So that was a short setup. Again, traders, call buyers took their foot off the gas. They started buying puts, and price moved lower, and aggressive sellers stepped in the initial move lower as well as the pullback. All right, so that's the short setup. And note, during this move lower, this light blue line in the subchart indicating large traders buying the move lower. They're buying weakness with iceberg orders. They used to hide their size. Those orders are shown on the subchart, that rising light blue line, as well as the on-chart indicator showing the more specific events. Large traders buying with iceberg orders. That helps to turn price around. Then as options traders started taking positive delta positions, aggressive buyers came in again. Good entry point right around the 45.50 level. All right, so that's the short and the long entry this so far earlier today in the S&P 500. Clues in both the hedging flow options trades and in order flow here in Bookmap. All right, let's take a look at NASDAQ now. And NASDAQ a little bit more bearish than the S&P 500 today. It has been recently. Let's go take a look at Hero and see what options traders are doing. Let's go to the NASDAQ signal. I'm going to zoom in on this. So there's a little bit of kind of wonkiness in that initial signal, so I'm going to zoom just a little bit. Sorry about that. All right, what this is showing is somewhat of divergence here. Initially, price is moving sideways, and then Hero starts to make a lower high, setting up a short. So Hero making lower highs, a lower high, and then makes higher lows, setting up a long around 11 a.m. All right, let's go take a look at the Bookmap. So here's that short setup right around this cluster of levels, 386, 15,825. Aggressive buyers on the way up, shown by the green volume dots, and below that cluster of levels, aggressive sellers start to come in. Good for a 100-point plus move in NQ. Then aggressive, sorry, excuse me. Then aggressive buyers start to come in. Note the shift in cumulative volume delta here around 383. The pink line of the subchart. Also, you can see more and more aggressive buyers coming in. Green volume dots as traders started taking positive delta positions. Hero made a higher low, and price moved higher back up to that cluster of levels. Let's go take a look and see what options traders are doing now. So the hero signal for NASDAQ is all over the place. Let's take a look at another combined signal here, the Magnificent Seven. So this is a combined hero signal for the 7 stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. We'll take a look at some of those stocks in just a minute. This often provides, especially for the NASDAQ, a very clear signal. Let's zoom in on this. First of all, short setup in the morning. And remember, these stocks make up a huge component of both the S&P 500 and NASDAQ. Let's just take a look at that. This is a heat map for the S&P 500, and you can see all these stocks that are weak today. That's all the Magnificent Seven mainly. Those are definitely the weaker stocks today. That's the S&P 500. Let's take a look at NASDAQ, NASDAQ 100. And you can see the NASDAQ 100 is going to move in the direction of these stocks. So in the morning, Hero made a lower high, then moved sharply lower. And then just around 11 a.m., traders start taking positive delta positions. Price moves higher, that combined signal. They take their foot off the gas, and now price moving lower again. All right, let's take a look at some of the individual components. First of all, I want to take a look at Amazon. And Diego, hello, welcome, glad you're here. Yeah, I'll take a look at GLD in just a minute. And if anyone else has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, so Amazon. What I want to focus on here is the long setup. Right, just before 10:30, this flow alert comes in, indicating significant options activity, and then shifts higher. Price responds. Notice right around 12 to 12:30, the hero signal levels off. Now price moving lower again. Let's go take a look at Bookmap. We'll take a look at Amazon. And there's that reversal higher for Amazon. Right around 143. Note all the green volume dots today. A lot of aggressive buyers. So this long setup was good for about 2 points in Amazon. Let's go back to Hero. Let's just see what they were doing. So clearly call buyers, shown by the rising orange line. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. Call buyers definitely driving Amazon higher today. Sorry, I thought this issue had been resolved. Pretty typical pattern on a bullish day. When the call buyers take their foot off the gas, price consolidates or moves lower. So if you didn't take a long setup here, a good short setup, especially if price moves up to a level like a call wall, is to buy a put spread or sell a call spread. All you're doing with that type of trade is saying price, I don't think price will rise above this level, this short strike for your call spread or a put spread. All right, Ricardo asked, quick question, can you trade the NASDAQ as an indice on Bookmap? If you're referring to NDX, no, but you can trade NQ. So if you have a futures account, yeah, you can definitely trade NQ. So even NDX, I would not trade, of course, that's just an index. You can't buy or sell NDX. You can buy or sell options on NDX. NDX is so thinly traded, so there's not much liquidity. I would never trade NDX options. So, but you can trade NQ futures, QQQ shares, or QQQ options. Or even, well, I would not trade NQ options. So NQ futures or QQQ shares or options is what I trade for the NASDAQ. All right, so there's Amazon. All right, the next stock I wanted to take a look at is Meta. And note Meta, options traders came in pretty early this morning. Leading to a move higher, typical pattern. Take the foot off the gas, price moves lower. Let's see what they were doing. So just before 10 a.m. they started buying calls. That's shown by the rising orange line. They also started selling puts, shown by the rising blue line. Spotgamma has pointed out when the call line and call line, orange line, and the blue line, the put line, are moving in the same direction, that is a very powerful directional signal, and it is hard for a stock or whatever you're looking at to fight that. So kind of an early signal there for Meta. And let's go take a look at Bookmap. Look at Meta. All right, so Meta was a good long. Oops. Right around 315. There's the initial reversal at 314 and a couple of tests of 315. So Meta's, of course, one of the Magnificent Seven that has been moving down recently. Now it looks like Meta finding support at VWAP. Let's go back and see what options traders are doing. Go back to the total signal. Options traders take the foot off the gas. And note, Meta is actually trading below its put wall at 320. So more or less 320 acting and just below that level acting as resistance, with Meta trading below the put wall. Now it looks like options traders may be starting to take positive delta positions again, as Meta looks like it's finding support at VWAP. Excuse me. All right, let's see next. Microsoft. So initially short this morning in Microsoft. Note all the flow alerts here. Setting up a short. Now it looks like a lot of aggressive buyers are coming in right around 11, even as options traders are not participating. Let's see what they're doing. So it looks like mainly traders, they're buying puts and selling calls. Call sellers more aggressive. All right, let's go take a look at Bookmap. Note all the green volume dots, a lot of aggressive buyers in today. So options traders, call sellers, driving price action in the morning. Microsoft finds support at that liquidity at 363. Aggressive buyers start to come in again, price moving higher, even as options traders aren't participating. All right, Caleb wants to take a look at NVIDIA. Let's do that. NVIDIA has definitely been weak recently. After reporting earnings last week, is reversed down from around 500, now down just above 450. So that was a very nice swing trade after earnings. If you got in at 500 for a short. All right, let's take a look at Hero, see what options traders are doing. Note that 460 is the key gamma strike. Options traders taking negative delta positions from the open. Price moves lower. Let's zoom in on this, see if we can get a little clarity. Options traders, it takes a while, maybe about half an hour or so, but they shift start taking positive delta positions, and price starts to move higher around 11:45. And then they take the foot off the gas, started taking negative delta positions again. Price moves lower. So overall today, for NVIDIA, this notion of value is negative. So they are buying puts and selling calls. And Nikki, you're welcome for the webinar. Ask, is it possible to cover my mic when I cough? I do. Maybe I thought that would, I cover it with my hand. I thought that would mute that. I have a switch I can mute it. I've been trying to cover my mic. Sorry about that. Thanks for letting me know. All right, so that's NVIDIA. Really another bearish day in NVIDIA, trading down again from 500 last week down toward 450. All right, Diego wanted to look at gold, GLD. Let's go take a look at gold. So a little bit of a bearish day here in GLD. I don't have this in Bookmap, but we can take a look at the hero signal, see what options traders are doing. So they are selling calls in GLD, which makes sense when a commodity futures, probably for GLD, there's a call skew typically, where out of the money calls are more expensive than similar out of the money puts. So selling calls as price moves up makes sense. Typical contrarian options traders selling calls in GLD and price responding lower. And note as options traders have taken their foot off the gas again, prices leveled off. And let's see, let's take a look at Netflix. Interesting, Netflix also trading below its put wall. 460 put wall acting as resistance. Traders taking negative delta positions. Timely flow alert. Price moves lower down toward the 450 key gamma strike. Let's go take a look at Bookmap. Price opens just above the 460 put wall, quickly moves lower. Here's a good pullback entry to VWAP. And price still trading near the low of the day. All right, let's circle back and take a look at the S&P 500 and NASDAQ. So it looks like now this 456 level and VWAP, as well as point of control, all acting as resistance. Let's zoom in on this. VWAP is the light blue line, point of control, the purple line. You can see them here. And then the SPY 456 level just below those. Looks like the S&P 500 making a series of slightly lower highs. Let's see what options traders are doing. The S&P 500. So far for the day, the notional value for options trades is positive. And right around 1 o'clock, they started taking negative delta positions again. Price moving lower. Let's separate out puts and calls. So they are buying calls and buying puts. Call buyers more aggressive today. Notion of value for the orange line for calls 3.5 billion positive, and for puts right around 2 billion negative. So they're buying puts, buying calls. Let's take a look at one other thing. We can see what traders are doing with zero DTE options. That's shown by the green line. So the notional value, comparing the notional value of the green line showing trades that expire today, that's next expiry, and for the S&P 500, that would be the zero DTE. Comparing that with all trades, it looks like the notional value of the zero DTE trades is making up about half of the total notional value today. So if I were looking for a long, I would definitely look for this hero signal to shift up. And for price to move above VWAP and point of control. Let's take a look at NASDAQ. NASDAQ also below VWAP. Struggling at its lower weekly expected move. Looks like there are some aggressive buyers coming in, shown by the green volume dots. Also, buy stop orders have been helping to fuel a potential move higher. That's shown by the rising yellow line. May not be enough. Let's go see what options traders are doing. Let's take a look at NASDAQ. Choppy signal all over the place. Let's take a look at the Magnificent Seven. So slight slope downward in the total signal for Magnificent 7. All right, Nikki asked, do you mind explaining how to figure out weekly range? Yeah, I'll do that, and then we'll wrap it up for the day. All right, so it's very easy to do. Let's take a look at the SPX. I'm going to go to an options chain. So the Friday options expiration, December 8th, and I typically do this on over the weekend for the upcoming upcoming Friday expiration. So when the market's closed, I'm looking at this number right here. So right now this is showing plus or minus 52 points. Now if you want the daily expected move, you can wait until SPX closes today. So that this would be tomorrow, December 5th. So right now this is showing plus or minus around 24.4 points. So that is the daily expected move, and again you would wait until SPX closes 4:15 p.m. Eastern Time to take this number and then add that or subtract it from the closing price of SPX. Alright, so that's how I get the weekly and daily expected ranges. Let's go back to Bookmap. Back to the S500. So it looks like NASDAQ trying to break out of this range. Let's check SPX or S&P 500. And sorry, I don't know how to pronounce your name. So sorry for butchering your name. Eunice Benz wants me to take a look at looks like that is the Aussie dollar US dollar pair. Sorry, I don't have that. In Bookmap you cannot show spot forex, if that's what that is, and then I don't have currency futures shown, and that's certainly not in Hero. So sorry about that. Alright, Ricardo asked, could I provide a link that explains the screens I'm utilizing? First of all, this is Bookmap. You can, if you want more information on Bookmap, just go to bookmap.com. There's a great learning center there. So that's this is Bookmap, and before I was showing Spotgamma. That is a subscription service. And you can go to spotgamma.com for more information. The Help Center is free and available to everyone. Bookmap and Spotgamma both have great YouTube channels as well. Alright, so Ricardo, I hope that helps. And then I stream every day, and the recordings of my webinars available on the Bookmap YouTube channel. So the other, just go to spotgamma.com for more information. All right, my time is up. I want to thank everyone for watching. Thank you very much for your questions and comments, and I will see you tomorrow. Thanks again. Bye.